Justin Knight, Apple Hospitality REIT, listed on the NYSE back in May. You're a big owner of hotels, I think 176 hotels. So for those who missed your listing party back in May, why don't you reintroduce yourself to the world?
Thank you. I appreciate you having me on. Our hotel company owns 176 select service upscale hotels. We're one of the largest owners in the industry, exclusively focused on Hilton and Marriott branded select service hotels.
And you have over 22,000 rooms in your portfolio. Can you talk about occupancy right now? Because with lower gas prices, one would think people are traveling this summer, both business and leisure, and they're filling up your hotel rooms.
They are. Actually, we're seeing occupancy at all-time high. It's leading to higher room rates and really increased profitability in our sector.
And you own Marriott's and Hilton's. Those are your two brands. Why are you sticking with those two? Because there's a lot of hotel brands out there for you to own.
No, there are a variety of reasons, and that's a good question. We've focused with Hilton and Marriott because really within our sector, they have the strongest brands. Large brand recognition, great loyalty programs, and really an efficient operating model which generates high profitability for us.
And you are in select service. Can you distinguish between select service and full service?
Certainly. Our properties are rooms focused. So where a full service hotel has large ballrooms, multiple food and beverage outlets, ours are really focused on providing guests with an exceptional rooms experience. And because of that, they're very efficient to operate. We run very high margins and reduce the volatility that is experienced by full service hotels.
And you're in 32 states now, I'm pretty sure. Can you talk about where you're seeing the greatest growth? I know you're adding hotels in Southern California. It seems like you like warm weather.
Everybody likes warm weather, and Southern California has been an exceptional area for us. We've added a few hotels in the Burbank area, some in San Diego as well. But really, if you look at our portfolio, we're broadly geographically diversified. We own hotels in over 80 markets, spread across the United States in over 30 states. And really what we look to do is invest in markets where there are multiple demand generators, so businesses, strong leisure demand, and we look to find sites within those markets that are adjacent to amenities that have tremendous consumer appeal.
Can you talk about investing in your hotels? Because nowadays business travelers want more and more. They want Wi-Fi. They want all these internet-friendly rooms. So what are you doing to make them happy?
It's a good question, and certainly we've selected brands within the Hilton and Marriott brand family that are high-quality brands, and as I mentioned earlier, have tremendous consumer appeal. We've consistently reinvested in our hotels. The average effective age of our hotels is only 4 years, which is significantly younger than our peers in the industry, and that reinvestment continues to keep our hotels competitive and make them compelling offerings for our guests.
And then finally, right now, your REIT is yielding almost 7%, a little bit under 7%. Can you talk about your plans for the dividend?
Certainly. Really what we're looking at now in our space are very strong fundamentals. We've seen limited supply growth over the past 5-6 years, and really still supply growth below long-term averages. That, combined with a relatively strong economy that's continuing to grow, has resulted in strong operating performance. We talked earlier about our occupancies, which are at an all-time high. All of that is generating very strong and what we feel sustainable cash flows, which will help us to maintain and grow our dividend over time.
All right, thanks a lot, Justin.
It's been a pleasure. Thank you.
And thank you for watching The Street.